almost afternoon. Thank you for sticking around almost to the very end. I'm Dan Goodman. I lead the global ATM business at Mastercard. Got a special guest with me I'll introduce in just a minute. Excited to be here today to tell you about what Mastercard is seeing and what we're doing in terms of how do we reimagine the ATM, what it can do, and really the impact of what digital has on the channel. So, let's see. Digital, if you haven't already kind of gotten the memo, it's coming, right? It's here. We see it with consumers who are now using digital for more and more of their own payments. We see it with the statistics, even around things like Apple Pay. Right? We've got now hundreds of millions of consumers that are active on platforms like that. And for many of you as banks, you're starting to see that change as well, as consumers are trying to shift how they buy things. And Mastercard has been investing for many years in terms of how do we enable those consumers from a digital perspective for online, in-app, point of sale. And now we'll talk about what we're doing to really enable that for the ATM channel. So there's a couple of key things that we think about that are absolutely important and critical in order to be successful in terms of enabling these new types of products and new consumer experiences. First of all, it's got to be focused on the consumer. It's got to solve a problem for the consumer better than an alternative that consumer has today. It's got to be a good experience. How do we make that secure? More secure than it is today. Digital has lots of capabilities, but security sometimes adds more friction. How do we use digital to take friction out of the equation while giving the consumer that better experience? And how do we do this in a way that can scale? We've got millions of ATMs around the world, and that is the beauty of the ATM industry. You all know the importance of that interoperability. The promise that consumer knows that that card that they have is able to be used at millions of ATMs around the world in pretty much the same way. That's important. And how do we bring that same ubiquity and ability to scale into the digital world? And importantly for many of you, how do we use digital and what it can bring to not only, in some cases, lower your costs, but drive new revenue for you? So 3 things we want to talk about today: where we're trying to enable some new transactions and what we see as the opportunities there, and that means new revenue for everyone. How we're promoting cross-border and some of the challenges and friction points that we're seeing from consumers. And then how do we use digital to really transform the consumer's experience in terms of obtaining cash and using ATMs? So let's start with sending money, and more importantly, receiving money. There's a lot of ways for a bank consumer to be able to receive money into a bank account, using a debit card. We just talked about some of the digital solutions out there with things like Venmo and Square. But what about the un- and underbanked consumer? There are still a lot of them. We'll talk a little bit more about that, but there are a lot of them in the US. How do they receive money? Today, that's still something where they are cashing checks. They're paying a lot of money for that. They're going to physical agents. How can we leverage the ubiquity and the cost effectiveness of the ATM channel to open up the ability for those consumers to be able to receive money? So we see this huge population of the un- and underbanked consumer not really being served by other needs, by other means. It means everything that they're doing, they're not touching your ATMs today. They can't access it. They don't have a card, they're not banked, or they choose not to. How can we bring them and their business to your ATMs? We see opportunities across a number of different use cases. P2P we just talked about. It's a big business. Most of that is still done in cash or through check or transfer agents. How can we leverage the ATM for that? Governments pay out a tremendous amount of money in social benefits. Can some of that be done where appropriate through an ATM? The corporate rebate and incentive market, where they're sending out checks, where they're sending out gift cards. It's very expensive for many of those types of one-off opportunities. Is cash a better opportunity in some of those cases? Even for bank consumers, we all sometimes have need where we might lose a card. With billions of cards in circulation, we see across different portfolios anywhere from 10 to up to 25% of cards in portfolios that may be lost in a given year. It's a lot of cards, it's a lot of consumers who are sitting around waiting for that replacement card. What happens if you're traveling and you can't get into a branch to get that replacement card? Bank might send it to you, it might take 3 to 5 days to get there. You might need some cash in the interim. Today, you're using solutions, banks are using solutions that are very expensive. Can we use the ATMs to make that cheaper? Disaster relief, we look at those hurricanes, as those come through, consumers need that cash. It's the fastest way sometimes to get aid out to people. So we've built a product that's now live in the US market called Mastercard Cash Pickup, and hopefully a lot of you got a chance to see the demo in the other room. Please stop by if you haven't. But very simply, this allows someone, a sender, whether it's a government or corporate or another person, to create an order and send it to somebody else. This is not designed for withdrawing your own money, but to send to somebody else that order, where they can get as a simple text message. They can go to an enabled ATM, they enter their phone number, the order number, PIN. Now that's a lot easier than having to go to a check cashing place, wait on a long line, go to that ATM that's available 24 hours, one of your ATMs that might be in their local convenience store, and collect that cash. And importantly, this all happens on top of the existing card rails. Now, I didn't talk about a card, and that's the beauty of how that works, that we actually turn that transaction into what looks like a card transaction. So from an authorization, settlement, reconciliation standpoint, as far as all of your financials, that looks like a card transaction. So what I'd like to now do is introduce to you Paul Dwyer, who is the CEO of Via Americas, who is going to tell you a little bit about why he's very excited about now going to be using Mastercard Cash Pickup to be able to send money out, and the use cases that he's looking at for his company.
Well, thank you, Dan, and good morning, everybody. I'm happy to see some people still hanging on to the bitter end of a great conference. Walking around the trade floor, and getting a sense of all the different pieces that are involved in the ecosystem of running an ATM network, and really struck by the parallels and the overlap between this industry and the money transfer industry that I participate in. So just a couple of quick words about Via Americas. We have been around for about 20 years now. We were incorporated in 1999. We are a money transmission company. We're a money transfer company. We're licensed in all 50 jurisdictions in the U.S. that require licensing. We have payout services in 30 countries and a network of about 3,000 walk-in locations where people initiate those money transfer transactions. Today, our business is all U.S. to other countries, to Latin America principally, but also to Asia. We processed about $17.5 billion of money transfers in our history. A little bit about the banked and the unbanked, and you guys have heard this and you know probably more about it than I do, but we certainly understand the unbanked and underbanked community. Many of our customers are in that community, many are not. They are using money transfer services because they have a need to get money overseas. But many of our consumers are using domestic money transfer services, and the money transfer services that they're using tend to be relatively expensive for cash in, cash out money transfer. Some of the largest money transfer corridors in the world are US to US, which if you just stop and think about that for a minute, you don't think about that in terms of a money transfer, but a very significant portion of Western Union's revenue, very significant portion MoneyGram's revenue come from US to US transactions. The reason that the large incumbent money transfer companies have really dominated that market is because of the ubiquitous nature of their payout agent network. The money transfer companies, the large incumbents, MoneyGram, Western Union, RIA, I don't know if anybody from Euronet is here, but RIA is a wonderful company that we compete with. And especially, well, RIA, with their deal with Walmart, gained a ubiquitous payout network. MoneyGram and Western Union have that ubiquitous payout network because of the nature of their agent relationships. They agent, or they contract with stores with footprint all over the country. So the real power of those agent networks is not only on the intake side to take in transactions that are going overseas, but on the payout side. That someone that is sending money domestically knows that using one of those services, they're going to be able to receive the money someplace close to where their recipient is. So stop right there and think for a minute about the potential of the ATM network to replicate that kind of payout ubiquity. It's there, it's clear. The use case is very straightforward, but it takes a market leader like Mastercard to make it happen, because they have the convening power, they have the leadership ability to get independent ATM network owners, operators to say, hey, that's a revenue opportunity for me. I can serve people that I'm not serving today because they can come to one of my machines and receive a transaction that someone is sending them from across the country or across the city. Many of the domestic money transfer transactions are not from New York to Los Angeles or New York to Chicago or Miami to Indianapolis. They're from Brooklyn to Queens, okay? Because it's easier to do that, to do a small transaction, $100 transaction, $150 transaction, than to drive across and pay somebody cash that they want to pay. Maybe as Venmo grows, as other mobile wallets grow, that will decline in importance and volume, but today it's still huge, and it's an opportunity. It really is. What we see as the great power in this program that we're honored to participate in is the ability to leverage this vast network of cash disbursement stations in a compliant way. Now, we are licensed in all 50 states. The KYC is on us. The KYC on the sender, the KYC on the recipient, that's on us, okay? We have our processes well designed, well thought through. We know exactly how to risk manage those transactions. It's really up to the ATM owner-operators to decide whether or not you want to enable another revenue opportunity for your machines. These are not people that are going to walk up and put a card into the machine because they don't have a card to put into it. But there are people that can walk up and use your machine, withdraw cash from it, and be very satisfied with the value of the service that they've gotten. The type of networks that dominate the money transfer, domestic money transfer service in the United States, the numbers of payout locations are not that daunting when you start thinking about it in terms of the number of potential payout locations in a mobilized ATM network, a group of networks. And so, the convening power, the ability that Mastercard has, the technology, the security that they bring to the table should allow those of you that operate those networks to feel safe and secure in participating. And I'm here to tell you that there is a here and now demand and use case for this type of service that we're very excited to be using, and we encourage you to think about participating. For us, the main value points, the reasons that we think that this is really a game changer for the domestic remittance space is the real-time nature of the service, the ability to do it on a very cost-effective basis. It's a very easy transaction, mobile-enabled. so the recipient is receiving the information that they need right on their phone in an easy to act on way. And the fact that ATMs and enabled ATMs are as widely distributed as they are gives us the ability to market to our consumers that now, with this service, you can send cash anytime, anywhere in the U.S., and your recipient's going to be able to get it 24/7 from any terminal that is enabled. So I encourage you, those of you that can make the decision to put this into your tech queue to get it done, make the decision, because it's here, it's now, it's a great opportunity. Thank you, Dan, for the chance to come and speak to this group, and thank you for the business partnership. I'll leave it at that.
Thank you, Paul. So I think, as you can see, this is real, this is here, and as a call to action for those of you who are those ATM operators, right, we've got the key sponsor banks, they're signed up, talk to them about how do you enable. We've got the key manufacturers who put this into their software, so go get it. It's revenue, there's really no reason not to. So turning the page then, talk about the second piece we wanted to talk about was cross-border travel. And you think about consumers coming to this country and some of the key countries they come from, so over 75 million visitors coming to the US every year. What do they do for cash? Well, it turns out that they actually still use a lot of cash when they're traveling. And we've actually done some global studies, and that's fairly consistent around the world. But unfortunately for all of us operating ATMs, they don't source most of that cash at the ATM after they've landed. They bring it with them. They're getting it from home, they're getting it from their bank at home, they're going to currency exchange bureaus. Some of them are converting twice. They're going from their home country, they're converting it to dollars in their home country, then they're going not to the US but to other countries and converting it again to that currency. So they're paying for that. They're carrying large sums of cash with them. Why are they doing that? Why can't we get them to use an ATM after they land more often? Well, there's a couple of key concerns that they have, and some of these are about perception, and some of them are unfortunately fairly real. So the consumers perceive a challenge around transparency. I don't know how much money is going to come out of my bank account when I do this transaction. And even with DCC, we're still not able to communicate to them what fees they may be charged by their issuer. Consumers, when they're traveling, want to know how much that's going to cost. Consumers are risk averse. They just want that information. They don't want to be surprised after the fact when they get home. That was talked a little bit about yesterday, that statement surprise. And it may not even be when they're traveling abroad. That can be when they're traveling inside the US or using an off-us ATM. Consumers want to know how much that transaction will cost before they go ahead and do that. There's concerns around security. Unfortunately, consumers are now aware of the risks around skimming and PIN capture, and that is giving them concern over, am I going to use a foreign ATM? What happens if that information is compromised in a foreign country? Right? When consumers get concerned, they don't use it, and that keeps them bringing that cash with them. So what are we trying to do about that? And essentially, they've told us that that experience just isn't very good. So we think, number one, we need to go out and start re-educating consumers. And we've begun campaigns around the world that should be benefiting everyone here as we try to drive more consumers to use that foreign ATM, to get from 20 or 30% to 40, 50% of that cash to be sourced at foreign ATMs. So going out and we're talking to consumers about convenience, about value. Consumers know that there's ATMs at home, but for some reason they step on an airplane and have no understanding or don't believe that they'll find an ATM when they land in the US or when they land in London. They know they're going to find a Starbucks, but the ATMs, gosh, I don't know where that might be. So we've got to re-educate them that there are all of those ATMs out there. There are millions of ATMs, and you will find it. And how do we help them find it? And how can we help them also understand how they can do that transaction? Maybe they don't speak English. Maybe your ATM doesn't have their home language. What can we do about that? So what can we do, and how does digital help us to now start to transform that consumer experience? How can we use what we're all carrying with that bank consumer traveling here or from other countries has in their pocket, that mobile phone. How can we give them a mobile-centric experience with all the information that can be shared with them through their mobile banking app, in the palm of their hand before they even do a transaction? How can we give them that transparency so they know what that transaction will cost, what the FX rate will be, what fees might be charged by the ATM and might be charged by the issuer? They know they're going to pay something, but they don't want to be surprised after the fact. And how do we use digital to make a more frictionless and more secure experience for them? Leveraging the power of things that Mastercard and other networks have invested in around tokenization, around biometrics that are on that mobile device. Consumers are getting very comfortable with that. Many consumers now, many of us, unlock our phones how many hundreds of times a day using our face or our fingerprint. We're very comfortable with that experience, and consumers are now starting to expect that, even for accessing cash. Now, we showed before the idea of how many ATMs there might be on an island, but islands are great for those vacations. But they're not great when you think about these kinds of digital experiences in terms of not being connected. We don't want islands. Talked before about the value proposition of ATMs and their ubiquity. And as we move forward with digital, consumers have said, well, I also want there to be digital ubiquity in terms of my ATM access. I don't want to think about, well, over these ATMs or with this bank it's this way, over here someone else has got it a different way, and this one isn't connected to that. Different processor, different manufacturer. We've got a global network that we've all built on top of. Not surprisingly, consumers have said, by and large, they want those digital experiences to work at all of the ATMs that they use. That's that promise of ubiquity. So what's Mastercard starting to do against this? We're building something that we call our Cardless ATM solution, which might look like some other things that are out there, but there are some key differences. But as far as that consumer experience, this is all based on that mobile banking app. Mastercard's not building an app to compete with any of you as the issuers. You come on up to an ATM and you're going to click that acceptance mark. You scan the QR code. Now we know what ATM you're standing in front of. And now we can personalize that experience for you in terms of any fees that you might be charged based on your specific card with your bank using that ATM. We can communicate that, ask you to authenticate. Now I can use my biometrics. I can use my fingerprint, my facial recognition, a password if that's what the bank wants, and do that all in the safety of my mobile banking app. Consumers want to input things into their phones. When given the option, they would prefer that over inputting things into the ATM. They trust it more. Why? It's their phone. We can authenticate and then pass that information securely through the cloud to that ATM and ask the ATM to go ahead and do an authorization across those existing card rails. And that's the important piece about this solution, is that it uses the existing global network. So that authorization, settlement, and reconciliation all happens the way that it happens today. We're not changing that process. And that's an important distinction. That allows this to potentially be scaled across the world, so that your consumers can use this solution everywhere. And importantly, and we talked about that transparency and giving the consumers new value and the ability to see that information. Hopefully you can see the details there, but what we're showing is the idea that a consumer can land in a foreign country, find an ATM, and essentially be able to shop for that ATM. What's closer? What has a better rate? Where is my bank offering me through a partnership where we've got certain ATMs? It might be some kind of surcharge-free offer that they have. This lets that consumer make that choice, and it lets you as the bank express that value proposition to your consumer right in their hand. And I can see now all those different fees, how much the FX rate might be, what the issuer is charging me, what the ATM is charging me. And I now know to take out that £100 in London, it's going to cost me $137.61. That's what would come out of my bank account. And I know that before I do that transaction. No surprises. So what do the consumers say about this? Well, consumers actually want to use this. 78% have said that they are likely to use this kind of cardless solution. And a big chunk of them are even willing to start giving up their card. Many of them, no surprise, but for a while, will want to continue also carrying the card with them as that safety and backup. And as they get more comfortable, we'd expect more of them, especially those who are already using a lot of those digital wallets, and are using those mobile banking apps will start converting. No surprise, they're really excited about that notion of transparency. The wows that we got when we tell them about this are, we don't see that very much when we talk about payments. Payments doesn't have a lot of wows in consumer research. But they said, wow, that is incredible. If I can get that information as a traveler, I would use that foreign ATM more. That solves my problem. You've given me the transparency, you've given me convenience, and you've given me the security to feel that my card can't be skimmed. This is always going to be in my language, in my banking app. It's consistent, it's comfortable, it's secure. I'm more likely to use that. And that's, I think, what we all want. We want to give the consumer a reason to use the ATMs more. Pre-staging, interestingly, wasn't the big seller. They're concerned. What is pre-staging? Does that mean the money is taken out of my bank account? What if I don't do that transaction? Am I locked into that ATM? Do I now have to reverse that? That doesn't exist today. The consumer hears that and they say, well, wait a minute. That gives me a little agita. They don't like agita. They want to know that nothing happens in terms of a financial transaction until they get to the ATM. And the idea of saving time, they didn't feel like there was a big need. Now, in certain markets like India, there is a big need to speed up that line, and the consumer's aware of that. But in most countries, they just wanted to have that experience, and actually they wanted to make sure that there was enough friction in there. They didn't want it to be too frictionless and feel like something could happen without them being in control. Consumers want transparency, they want control. They see this as making banking easier. And that up to 80% of them would use this for that foreign travel. And even, of course, that means domestically and the ability to use more off-us ATMs. And most importantly, I think, and we talk about digital and what digital can mean for all of us, is it's about innovation. And the consumers will look at this and they've told us, that will make me think my bank is more innovative. They're adding value to me. I'm more likely now to download my bank's mobile banking app and use that. This is giving me a compelling reason to use that mobile banking app and engage more digitally with my bank. And that's, I think, what we're all looking for in terms of that migration to the digital world, is that engagement. And access to cash is a key thing that the consumers want, and we can deliver. So thank you. We've got some links if anyone wants to learn more about the products. Please do stop by in the, on the show floor and see the demos if you haven't already. And if we have a minute, I'd be happy to take any
Yes, we
questions.
have some time for a question for Paul and Daniel. Anybody have any questions here? Going through the, look through.